Hey everyone, welcome back to Corporate Decoder, the place where we decode the hidden stories in corporate filings. Today we're diving into a recent report from Treasure Global Incorporated. If you are wondering what deals they've been making, stick around. And before we jump in, if you love getting straight answers from these dense documents, make sure you are subscribed. And don't forget to join our Discord community via the link in the description below for more exclusive discussions. Alright, so this report is all about a couple of new agreements Treasure Global Incorporated, or TGL as they're often known on the market, has entered into. Think of this as a financial peek into their recent business moves. The first big thing is TGL signed a sale and purchase agreement on the 22nd of October 2025 with a company called Nextcloud Limited. What did they buy? Nessie Cloud sell them an AI server. Yes, you heard that right, an AI server. This agreement is pretty straightforward. It starts on the 22nd of October and really only ends when the server is fully delivered, accepted, and paid for, unless both sides agree to end it early or one side messes up. Now, let's talk about the money. The total price for this AI server is $750,000 US. How are they paying for it, you ask? Well, it is a split. They're paying $280,000 US in cash. The rest, a hefty $470,000 US, is being paid in the company's own stock. This means they're issuing shares to Nextcloud Limited. The cash part needs to be paid within 14 days after the server is delivered. The shares, though, they have to be issued within 10 business days from when the agreement was signed. This is a pretty common way for companies to handle big purchases when cash might be tight, but it dilutes ownership for existing shareholders. Like most deals like this, the agreement comes with the usual clauses about what both sides promise, what they guarantee, and how things can be ended. Nothing too unusual here, just standard legal stuff to protect everyone involved. But that is not all. On the 21st of October 2025, just a day before the server deal, TGL also inked a service agreement with a company called WeShare Management, SDNBHD. This agreement is for these service providers to offer certain services to TGL for a period of 2 years. So they've bought technology and now they're setting up the services to run it. And how are they paying for these services? This is where it gets interesting again. The total cost for 2 years of service is $150,000 US. And guess how they are paying for it? You guessed it, stock, specifically TGL shares. The cost basis for these shares is set at $0.85 US per S-share. These shares need to be issued within 3 working days from when the agreement started, which was the 21st of October 2025, so they're essentially spending about $2.25 million worth of their stock in total for both the server and these services very quickly. Now, a quick note on how these shares are being issued. The report mentions that these shares are being issued under Regulation S, which is an exemption from registration requirements under the Securities Act. This basically means they are not registering these shares with the securities regulators in the same way they might for a public offering. This is common for private placements or deals with foreign entities. For those who want to dig even deeper, the actual agreements are included as exhibits. Exhibit 10.1 is the sale and purchase agreement for the AI server, and Exhibit 10.2 is the service agreement. These are the full legal documents if you are curious about every single detail. And finally, the report is signed off by Carlson Thau, the Chief Executive Officer of Treasure Global Incorporated, confirming these deals are official. So, what does all this mean for Treasure Global Incorporated? This filing shows a company very actively investing in its future, specifically in an area that is booming AI. They are acquiring hardware, the AI server, and securing the services to support it. The fact that they are paying a significant portion of this with stock at a set cost basis suggests they might be valuing their shares quite highly internally, or perhaps they are trying to conserve cash. For the shareholders, a substantial issuance of stock can lead to dilution, meaning their percentage of ownership in the company decreases. But if these AI investments pay off big time, the growth could outweigh the dilution. The key risks here are the successful integration and effective use of the AI server, and whether the services procured will deliver as promised. It is a bold move into a high-growth sector, but the execution will be everything. Treasure Global is betting on AI to drive its future growth. Will it pay off? Time will tell. Alright, that is our breakdown of Treasure Global Incorporated's latest filing. What is your take on these AI? Focused deals and their use of stock for payment. Do these moves signal a strong future or potential dilution concerns? Let us know your thoughts in the comments below. If you found this analysis helpful, please hit that like button. It really supports the channel, and subscribe for more decoded corporate insights. And don't forget to join our Discord community for more in-depth discussions. Thanks for watching. See you next time.